so much. Hello, guys. Oh, yeah, you can hear me. Or does it work? Yeah, nice. Good afternoon, everybody. Uh, how do you like this conference? Have you tried already some rakia here? Okay. My name is Konstantin. I'm the co-founder and the managing director of Mizen. And just a few words about us and my trip here. I came by plane, basically. And before Mizen, I've been working in a VC fund with 400 under management, and we had a focus on fintech and crypto. And while I was working there, I've met my current partners and the guys who we are working at the moment. And they were portfolio managers at the crypto hedge fund. Like 2 years ago or something like that, we started to work with different projects here and there, helping them with their tokenomics, business model strategies, fundraising. And basically this was our main business that we were doing from like 2 years ago. And at the moment, we have approximately 15 people in our team, and we have completed over 30 projects for the previous year. We work a lot with founders, and as a founder, you usually see a token as a fundraising tool. So this is usually the main purpose. So actually, it could be a great idea just to raise some funds, to make a lot of money, to exit, to forget about stuff, to raise funds like to retire for the entire life, go for Maldives or Seychelles or whatever, and just relax. But some of the founders want to develop the project, develop the community, develop technology, and that's why it is important to think about the token in other ways also. So you should think, usually founders think about how to incentivize their community, how to decrease customer acquisition cost, how to increase the retention of the users. And basically these are the most important things that founders are thinking when they try to develop the token. But speaking about the most important thing is raising money and raising funds for the further development. You should think about the investor. What do they want to see in your project? And here are like four, I believe, main ideas of what is very important for the investor. Of course, they are looking for the high upside. They want to have 10x, 100x on your project. That's why they're investing. Basically, your opportunity should have at least 100 million potential marketing revenue, just because if it is a small market, there is no interest in it, so they will just keep this opportunity. Of course, there should be some kind of a proof of demand, because if you have already some traction, you have already users, you have MVP, you have done something, then you can go to investors, to VCs, and try to raise some funds. And of course, at the beginning of your road in this big world of business, at the seed stage, the Series A. So at the beginning, investors look at your team, and usually they invest in your team and your ability to execute your vision, to execute your idea. So they measure how does that make sense for them, that you have that experience probably, or you have that ability to manage that. And of course, they are looking for an exit opportunity. And basically, this is the place where the tokenomics starts to develop, and here is its place. So the exit opportunity is the investor want to understand that they won't lose money while they are investing in your project. So they want to make sure that they will take it in the future, maybe in 1 year, 2 years, or whatever. It depends on your tokenomics. So speaking about tokenomics, there are like 3 main pillars: utility, economic security, and value capture. So speaking about value capturing mechanism, it's when your project is developing, is growing, and let's say you're getting more and more users, you're getting more and more revenue, value locked in your project, in your protocol, and etc. And the price of the token is also increasing. So this is the main thing when you have the alignment between the token and the project. The second thing is economic security. This is about allocations, this is about vestings, this is about how the investor will be sure about that these projects will survive. This is also about these death loops, sustainability loops that we'll speak later. And about utility, this is how your ecosystem can use your community can use your token, and why do your projects need a token at all? Because a lot of people just try to put this token in every project just to raise money, and then you try to understand, well, does this project need this token at all or not? So moving forward, let's speak first about the allocations, then about the sustainability and utility. So speaking about defining, these are the maybe 5 the most important things in terms of developing the allocation for your project, and you should understand the clear objectives for every part of allocation. Just because if you don't understand how much are you going to raise in the future, how much are you going to provide the airdrop, and how much are you going to spend on marketing, this will be very hard for you to develop the tokenomics. Especially if you should think not in terms of tokens, but in terms of dollars. How much are you going to spend on this or that? So as for the second point, to segment the investments into round, usually you should understand how much money you should attract to get that product into the market, to maybe become profitable, to get the community or etc. So you, let's say, have to raise 100 mil, and you can just sell it right away and give 50% of your tokens to the investors. But basically, it usually doesn't work. So you have to split these rounds into this amount into several rounds, and you will have different valuations on every stage. At the beginning, you will have smaller valuation, and you will raise, let's say, 1 million, and you will let's speak in terms of real cases. Approximately at the beginning, you will have 10 to maybe 20 million market valuation at the beginning. So providing maybe 1 or 2 million, raising 1 or 2 million, you will give 5 to 10% at the beginning, and then you will maybe get public rounds or etc. with a higher valuation when you have developed already a little bit of the project and you have some traction. As for the benchmarking, you should have a look at what happens in the market. How much money does other projects raise? How much do they allocate for, let's say, investors, or other allocations for, let's say, marketing or community rewards, or etc. So one more very important thing is transparency. You should be very transparent about your tokenomics. We will discuss some of these points with cases just in a few moments. And the transparency is about that everybody in the community should understand what is this allocation about. So is this for, let's say, for these investors, or is it just the community and you can spend this money and these tokens like how you would just imagine that, just to give your family some tokens to this QL or etc. So this is about transparency, and everything should be clear in your white paper and all other materials. So this is one of the cases when the team had a big portion of allocations into different chunks allocated to somehow related to the team. So they will be able to sell it while they will need some money. And actually, if you have that tokens in your hands and you can sell it, there is a very high selling pressure on the token. So you basically don't want to be that greedy and to take such a big chunk of tokens for the development of the project. It is actually a good idea to allocate more tokens to the community. Also, one more Actually, all of the cases are real cases, and we decided to skip some of the names just because we don't to make a black PR for these tokens, and we can discuss these tokens like later if you want. As for the Eigen layer, there is a very good example that they provided an airdrop and they allocated 15% for the airdrop, and the community was not very satisfied with that just because they provided the rules to get that airdrop, and the most amount of liquidity that was provided to the protocol was from Canada, US, and other countries that were restricted from this list of the airdrop, and that's why the community was absolutely not happy about that. The other thing was that these tokens were not transferable. So you will see this on the website that, okay, yeah, I have it, but anyway, like you can do nothing about that. And you have absolutely no vision about what will happen in the future with these vestings, cliffs, or whatever. So you just have this number on the website and no guidance at all. And the second thing was that there were 2 seasons, and there were absolutely no rules of how it will happen. So the problem was here with the transparency. So the community didn't understand what was happening with their tokens and what they will get from that. Another thing is about aligning the interests of investors and using the benchmarking and trying to understand what happens in the market. So actually, this is the example of when the team vestings are shorter than investors' vestings, and like investors just see these tokenomics and they understand that the team is not interested in the long-term development of the projects. They will get 15% airdrop at the beginning. Well, it depends. It could be a good idea, but we should dive deeper into specific tokenomics and specifically this case. And as for KOLs, this is also shown that these KOLs are absolutely not interested in the long-term development of the project. So investors will just skip this investment opportunity because they have no idea why this should work, because they will just get away with this. I mean, KOL's team will go away with these tokens, and that's it. So speaking about the timings in the market, we have spoken to different VCs and investors, and they tell us that if you have a TGE before the December of this year, okay, they will speak with you, just because they understand that usually they will have a cliff of 6 maybe to 12 months, and they won't see their tokens at all just before the end of the end of the bull market. So it's not interesting for them to get the tokens when it is already a bear market and the valuation of your company is very, very low. So that's why it is very important to understand and align your roadmap and strategy of your fundraising with the market. So this is the idea. So you should try to raise funds as soon as possible and to do the public round at the top of the bull market, just to raise as many funds as possible to go through the bear market, to develop that project, to be very strong at the beginning of the next one. And let's speak about the utility. These are the main ideas of the utility. One more time, you should have the clear purpose of your token, just because I've seen a lot of projects that just want to use this token and they tell us like, do whatever you want, we want to raise the funds. Like there is no clear purpose of the token and your project should not get this token at all. So this is the cornerstone of every tokenomics. Then you should have strong incentives for your community, for other stakeholders, for investors, and etc. to hold their tokens. So yeah, then you should of course have integration with the platform. We should not go into the meme coins, but basically this is also a good example of tokenomics. One more idea is scalability. A lot of projects, I don't know why, they think about that, well, okay, we can develop the project and maybe our capitalization will go, let's say, 20 mil or something. But if the price of the token and the capitalization will grow higher, they just don't understand what will happen in that case. I will show the example of the issue with the scalability in a moment. And of course, compliance. So this is an example of the case when you just don't think about the scalability of the project. The idea here was that while you can buy access to the platform by paying in tokens. So there was a fixed amount of tokens from 1 to 75. Well, that makes sense when the price is less than $1. Well, yeah, you can spend, let's say, $1 to enter the platform. In this case, it works. But if the price of the token goes up to $200, you have to spend up to 15,000 just to get access to the chat. It's crazy, and these are the end scenarios of the tokenomics that you should also consider. What will happen if everything goes very, very well, and what happens if everything goes very, very bad? And of course, you can, to understand the sustainability stuff, you can draw some kind of a sustainability loop to understand how everything that happens in your project provides and adds value to the growth of the whole ecosystem. What about the developers, about the community, about the project, about everything? So you should understand how it works. And when you do this type of sustainability loop, you can see where there are issues with this sustainability. Maybe you can see what happens if everything goes wrong and there is a death loop. And let's speak more about sustainability. Of course, this is very important for sustainability. Yeah, this is another example. So if we speak about sustainability, from the first point of view, it could be a very sustainable project. But when you dive deeper, you can slightly understand that there could be some issues in this or that scenario. And in this case, you can just try to understand what will happen with your project if everything goes wrong, and you can manage this risk. You can. There are cases when you understand this risk and you transfer this risk to another counterparty and to another stakeholder, and you incentivize them to take that risk. So this is also one of the ideas. So just think about the risks and what may happen in bad scenarios. Well, to sum up, it was a wonderful 20 minutes. To sum up, the main idea is of tokenomics. It's very important for investors because they want to have your project to see in the success in the ladder of the CoinGecko in top trending, in top by capitalization, or etc. As for the investors, they want to see it's sustainable. They want to see the clear utility vision, and they want to understand how it works and just don't hide anything. So think about best practices, allocations, vestings, utility, and sustainability. And basically that's it. You can follow us on Telegram. We will post some more additional information about this research soon, I believe. And also you can message me or message us on our email, and we can speak about tokenomics. We can provide benchmarks or whatever. So thank you so much. If you have any questions, I would love to, if I have still some time.
Yes, we still have time for questions, so. Oof. This is going to be a long Q&A session, I see.
Hi, thanks for the talk. How do you prevent the death spiral of a token when, in the absence of any other signals about the company, the market starts treating the token as a signaling mechanism? So, for example, when you have a good project, but the price of token starts falling, and everybody loses confidence, and you demoralize your workforce and your community and everybody else. How do you prevent that?
So basically, you should develop your tokenomics to prevent this stuff. And if you have already the project and the tokenomics and the token in the market, maybe it is too late. But if you have this issue at the moment, I think that you should try to think of the reasons. What is the reason of why the price is going down? So is it about the community is not satisfied with something? Let's say we've discussed one of the cases when the community was not satisfied and they just withdrawn a lot of liquidity from your project, and that's why it was in a very bad shape. Or so you can somehow analyze that issues and try to solve them. So this is one of the things. Also, you can try to, when you develop the tokenomics, you can try to, as I said, try to understand the risks in this sustainability loop, in this loop of your value, and understand what are the risks. Then you can, let's say, exclude the utility of the token where this risk appears. Or you can, if you want to keep this utility in your token, you can try to manage this risk and to hedge it to another counterparty, to another stakeholder, to maybe issue one more token, so they will hold that risk. Or you can try to develop a sustainability mechanism, price stability mechanism of the token, so it usually slows the growth of the project and the growth of the price, but if everything goes wrong, it supports the price. Thank you. Thank you for the question.
We had one more, yeah.
Hi. What is your approach to model tokenomics for projects? Which tools you use? Is it Excel or something special?
Thank you. So basically, we use Excel. We do the Monte Carlo analysis. It's when you try to do a lot of different random scenarios and random approaches. You have a range of different outcomes. And this is the thing, this is one of the things that we model. The other thing is that we do these different scenarios, what happens in this case, what happens in that case, and we try to understand what could be the consequences of good scenarios or bad scenarios. So if everything goes really, really well, and the price of the token will be 200, as in the example, in the case, what will happen with your business? Will you have the access to your platform that will be 20,000 or something? For instance, when the sneakers were $500, this was a very big entry barrier for newcomers. So we try to manage these scenarios. And basically, yeah, we work with Excel a lot. Thank you.
Yeah.
Question. I have a question about managing risks related to decentralizing and burning the LP tokens. Let's say if you want your project to be sustainable, to be decentralized, if you want investors to have more confidence, you deploy your token to an exchange and you burn LP tokens. Are there any mechanisms to manage risks that are associated with this? Let's say if you deploy liquidity and then you burn LP tokens, then there is a risk that this underlying protocol, something might happen to it, right? Like the team will stop developing it, it will be abandoned and so on. So in this case, if you burn LP tokens, the tokens in the pool will basically be like lost if you don't have any risk management tools, right? So how to address these risks here?
So I think that we can remember the very old recommendation of finance to diversify your risks, not to provide all the liquidity to only one platform, for instance. This is one of the things, but in this case, you will have to manage that on different platforms, there could be different price. So this is the other thing that you should manage. Basically, actually, it's a really good question, and you really should diversify and try to allocate your liquidity into different projects, into different pools, into different DEXs, and in this case, if one of them will go and sink, will go down and sink, in this case, you will have at least, let's say, 90% of your liquidity, initial liquidity. Sorry?
And this can burn the supply as well, so it can also be some sort of a positive thing, right? If you diversify and then one of the protocols, so let's say, goes stops developing and so on.
So if they stop to develop the project, it means that probably there will be no more new features in this project, in this protocol, and probably there will be no attraction of new users. So, but liquidity will stay there forever. And well, actually, you can really forget about that liquidity. But if you have your tokens there, you should manage that you will have different prices, because there will be an arbitrage opportunity for the just players in the market. So this is not, they just, of course, if they just stop to exist, that would be a very good thing for your project. But usually that doesn't happen. They just stop to develop this project, and that's it. But the liquidity stays there forever. Thank you.
We have time for one more question. Do we have one more question? And it's a wrap.
Thank you
Then
so much.
give it up for Konstantin.